Okay, welcome back. So, on to the last part then, part C, reconcile the net cash flow to movement in net debt. So, before we started, I suppose I just want to talk a little bit about this concept of net debt. So, for the ordinary level, it's reasonably straightforward. Just imagine that you had a loan from your bank, and your loan amount was 10,000. You borrowed 10,000 from your bank. Okay, and just imagine then that we call that as a debt. It's something you owe the bank, and we consider debts to be minuses. So your position there is you're minus 10,000, you owe them 10,000. Okay, but imagine then at the same time though you had a current account with the bank, you had another bank account, and in that bank account you had 4,000 euros. Okay, so you have 4,000 euros in cash in another bank account with the same bank. Well, then you might say that your net debt position is you're minus 10 because you owe them that, but you have this 4,000 that you could use to pay back some of that 10,000. So altogether, your financial position or your net debt position is your minus 6,000. So if we just put the minus 10 and the plus 4, we get minus 6,000. So that's basically in a nutshell how we would calculate net debt. And so we'll calculate the net debt for this business in a moment, I suppose, for two different periods. But before we do, just a quick look. I just wrote down the format of how this last reconciliation statement will look. It'll just have these 5 lines in it and this heading. And the heading again comes from the question. It says reconcile the net cash flow movement, or net cash flow to movement in net debt. So we just say reconciliation of net cash flow to movement in net debt. So the rest of it remains the same. Reconciliation of, and the rest of it is the same. Okay, and again, like the first reconciliation statement, it's just really changing the net cash flow. In this case, we saw from the last part that it turned out to be an increase in cash of 8,000. Changing that into the figure for movement in net debt, the change or the how much your net debt has moved by or changed by over the last year, basically. Okay, so again, just to start it off, you always started off with the net cash flow, or your, in this case, was an increase in cash. If I turn this over just to show, increase in cash, the very last part of your cash flow statement was 8,000. That's what we're starting off with, plus 8,000. If it had been a decrease in cash, it would be a minus something or other. Okay, and then we're going to fill in these figures as well. But a little talk first of all about the net debt 1st of the 1st and net debt 31st of the 12th. So we spoke about what net debt means, how you calculate it if it was you. And it's the same idea with the company. Now, when we say net debt on the 1st of the 1st 06 in this, we really mean the net debt on the 31st of the 12th, because 31st of December 2005 is pretty much the same as the 1st of January 2006. You know, there's only hours or minutes or seconds between them, if you like. We consider them to be the same day. So we're going to get the net debt on this date and then the net debt on the 31st of the 12th, 2006. So we'll calculate the two of them first of all. So like I said, net debt takes into account how much you owe in loans and how much money you have in the bank or in cash. Okay, in this case, in 2005, or 1st of the 1st 06, you had 180,000 of debenture loans. So we count that as your minus 180,000 you owe. So 1st of the 1st 06, you have this minus 180,000 debenture debt or loan. Okay, and at the same time you have some cash, whether on hand or in the bank, of 64,000. So we considered that a plus 64,000. So your net debt position then on the 1st of the 1st 06 is when I add the two of these together, and that gives me 116,000, and it's a minus is your net debt. Just as a quick aside, I suppose, if this was like minus 100,000 and this was plus 120,000, and then this turned out to be a plus figure of 20,000, we'd call that net funds instead of net debt. So when your debt is bigger than the money you have a net debt figure. When the money you have or the funds you have are bigger than the debt you owe, then you have net funds. Okay, so that's your net debt figure for the 1st of the 1st. Now our net debt figure for the 31st of the 12th. Again, what do you owe on the 31st of the 12th, 06, 120,000 according to this. And your loans, or the money you owe, goes in as a minus figure. And how much have you got in the bank or in cash? You've got 72,000, and that goes in as a plus 72,000. And when we add that minus and that plus together, we get, let's see, minus 48, am I right? 48, I think. 48,000. Now we can put these in here as well if you want. You don't have to do it in this order. You could start from there and work your way down, but since we've calculated them now, we may as well put them in. The first was minus 116. And your net debt figure on 31st of the 12th is minus 48,000. Okay. Now, the change in net debt, well, the change going from this year to this year, you've gone from minus 116 to minus 48. So your minuses have gone down. If you like, it's a minus situation, which is a plus. In order to go from 116 minus 116,000 to minus 48,000, the change must have been a plus figure. Something must have been added to that in order to give you this. And if we tried to work it out, I suppose that would work out to be a plus 68,000. Your change in net debt was a plus 68 change. Now, this figure here, as I say, we're working backwards, but ordinarily you wouldn't. You'd work from here downwards. This figure has to be the same as whatever the change in your cash figure for the year was and whatever the change in your loans figure, if you like, for the year was added together. We already know the change in your cash figure was they went up by 8,000. We know the change in your loans figure over here, it went from 180 to 120. That's a change of 60,000. Now the question is, should it be positive or negative? Well, we know it's going to be positive because these two have to add up to that 68,000 there. But why should it be positive? Because when you repaid those loans, it brought your minus figures down, if you like. So it had a kind of a positive effect by lessening your minuses or reducing your loans. So all told, you had this positive effect by increasing your cash, this positive effect by repaying your debentures. So if you had gotten more loans, this would be a minus figure. If you had a decrease in cash, this would be a minus figure. So altogether, you had these two positive figures, 8 and 60, giving me 68,000. Okay, I could work out my net debt on the 1st of the 1st, 06 to be 116,000, just like we did here. If this is the change, if I add the change onto the net debt here, and it gives me this figure for net debt on the 31st of the 12th, this figure then has to equal whatever I calculate to be the net debt figure, and indeed it does, so we know we're right. So you can kind of double check as you go along. So one last thing, I've said this already, but I'll just repeat it again. If it turned out in either one of these years, or both even, if this was a plus or this was a plus, you would call it net funds. Net funds. Now, I'd say very rarely does that happen. In almost every question it's a net debt, but if it did, it would be called net funds.